advance. Let us do some more problems. Write down. Extract of a trial balance. Extract of a trial balance. Extract of a trial balance. Particulars. Debit, credit. Write down. Commission. Credit balance 9,30,000. Commission. Credit balance 9,30,000. Close the trial balance. Adjustment number one. Adjustment number one. Commission received in advance. Commission received in advance. ₹30,000. Commission received in advance, ₹30,000. Credited to commission account. Credited to commission account. So you are given commission, income, trial balance, credit side 9,30,000, and then in adjustment what are we saying? Commission received in advance 30,000, but by mistake it was credited to commission account. Before we start solving the problem, please tell me what is the entry you pass when you receive some income. What is the entry you pass? Cash or bank account to income account. Cash or bank account to income account is the entry you pass. When you receive income in advance, what is the entry you pass then? Cash. You cannot show that amount as income in the books of accounts of the business. You have to show it as a liability. What is the entry we write? Cash or bank account data to commission received in advance account or income received in advance account. Okay. In the future, this income received in advance will become an income for the business. Then what is the entry you are going to pass in the future when income received in advance is treated as income? Income received in advance account data to income account. What is the entry you pass? Income received in advance account data to income account is the entry you are going to pass. Okay. Let us start solving the problem. A small profit and loss account and a small balance sheet. Now, what is the commission income given to in the trial balance? Commission income given in the problem 9,30,000. We show it in the profit and loss account by commission 9,30,000 in the P&L account, inner column, credit side, because it is an indirect income. 9,30,000. Okay. Then what are we given? Commission received in advance. How much? 30,000. By mistake, it was credited to which account? Commission account. Please tell me, when you receive income in advance, what is the entry you should pass? Cash or bank account data to commission received in advance account should have been credited. We have to show the advance amount as a liability. The person who is giving us the money, he becomes a creditor to the business. He is giving a loan to the business. Hence, commission received in advance account should have been credited. But by mistake you have credited which account? Commission account. Which account should have been credited? Commission received in advance. By mistake, which account has been credited? Commission account. Commission account by mistake has been credited, but we should have credited commission received in advance. So how will we rectify our mistake? We'll pass a rectification entry now. Rectification entry. Which account should have been credited? Commission received in advance account. Which account by mistake was credited? Commission account. Wrong credit given in commission account. To remove the wrong credit, we have to give a debit. So right here, commission account debtor. Commission account debtor 30,000 to commission received in advance account. Commission account debtor to commission received in advance account. This is the entry we have to pass now. We have removed wrong credit from commission account by giving a debit to the account. We have credited the current account now. So we have removed the wrong effect and we have now brought the correct effect. So now we have to give the impact of this entry in your final accounts. Because of this entry, commission account will be debited. Commission account will be what? Debited. It's already showing a credit balance in the trial balance. If that account has to be debited, that means balance has to be reduced. Less received in advance 30,000 less received in advance 30,000. That is the first effect. What is the second effect? In this entry, commission received in advance account is credited. It will show a credit balance. Hence should be shown on the balance sheet liability side. Commission received in advance account 30,000.
Sir, accrued income and advance both are different, right, sir?
Yes, accrued income is income receivable.
Receivable.
Received in advance is which you have received more than what you should have received. Okay, next problem. Write down extract of a trial balance. Extract of a trial balance. Particulars: debit, credit. Particulars: debit amount, credit amount. Write down now. Rent. Credit balance 6 lakhs. Within the trial balance, we add one more item. Rent received in advance. Rent received in advance. Rent received in advance. Credit balance 50,000. Close the trial balance. No further information is given to you, no adjustments. So how does the trial balance appear? Rent account is credited with 6 lakhs. Rent received in advance account is credited with 50,000. Both are showing credit balance within the trial balance. You are not given any additional information. So how will you deal with this kind of a situation now? In this problem, rent received in advance is appearing inside the trial balance. It is not outside the trial balance. So now my question is, how did rent received in advance account come into the trial balance? There is a ledger called as rent received in advance ledger. That ledger is showing credit balance. How is it showing credit balance? Because an entry was already passed. What was the entry we passed already? Rent. When we received rent in advance, we passed an entry, cash or bank account data to rent received in advance account. This entry was passed earlier. Rent received in account was credited. It was showing a credit balance. Okay. So the entry has already been properly recorded. You need not do any adjustments. So where will you show rent? Rent is indirect income. You will credit it to the profit and loss account. By rent. By rent. 6 lakhs. By rent 6 lakhs. Rent received in advance account is showing a credit balance of how much? 50,000. Rent received in advance is showing a credit balance of 50,000. Where will you show it? Balance sheet liability side. Balance sheet liability side. Rent received in advance account. Rent received in advance account. Balance sheet liability side. 50,000. Should I subtract it from rent?
No, sir.
We have properly recorded the entries, so no need of subtracting the rent received in advance from rental income. Is it clear, everyone?
Yes, sir.
Next problem. The first problem we did today was received in advance, wrongly recorded. Now received in advance, properly recorded. Okay. Next problem. Extract of a trial balance. Particulars, debit, credit. You're right. Commission. Commission. Credit balance. Commission. Credit balance 9 lakhs. Commission. Credit balance 9 lakhs. Commission received in advance. Commission received in advance. Credit balance 30,000. Commission received in advance. Credit balance 30,000. Close the trial balance. To the problem. No adjustments. No adjustments. So where will we show that 9 lakhs rupees? Profit and loss account, credit side. By commission 9 lakh rupees. Commission received in advance 30,000. Where will you show it? Balance sheet liability side. Commission received in advance. Balance sheet liability side 30,000. Okay. So now we have completed all the other adjustments which are there in final accounts. I think we have till now covered depreciation when it is given inside trial balance, when it is given outside trial balance. We discussed bad debts when it is given inside trial balance, when it is given outside trial balance. Discount when it is given inside trial balance, discount when it is given outside trial balance. Goods lost by fire, goods used for personal use, goods donated, goods given away as charity, goods used for construction of an asset. Outstanding expenses, prepaid expenses, income receivable, income received in advance, cost of goods sold, relationship between cost, profit and sales, opening entry, closing entry. I think we have all discussed all these adjustments till now. No? Now let us come to the next adjustment which we are going to discuss. Provision for bad debts. Provision for bad debts. Let us take up the next topic. Provision for bad debts. Write down. Write down. I'll give you a small story. Write down. Write down the story. Mr. Very Careful. Mr. Very Careful has been carrying on business for the last 20 years. For the last 20 years. During the year 2014, the present accountant resigned the present accountant resigned and you have been appointed in his place. You have been appointed in his place. Stop. On 31st December 2014, debtors balance is 20 lakhs. On 31st December 2014, debtors balance is 20 lakhs. Before finalizing the accounts, you go through the final accounts for last 20 years. You go through the final accounts for last 20 years. Go through all the final accounts for last 20 years. We wanted to see how our old accountant was preparing the books of account, how was preparing the final accounts. So just went through all the 20 years final accounts and noticed that on an average 5% of debtors were not collected. On an average, 5% of debtors were not collected. Full stop. You expect that out of 20 lakhs rupees of current debtors, out of 20 lakh rupees of current debtors, 5% may not be collected. 5% may not be collected in the future. So on 31st December, our books of accounts are showing how much as debtors? 20 lakhs. We expect that last 20 years 5% is not collected. Hence, out of 20 lakhs next year we may not be able to collect 5%. Okay. Right on. Continue. You go to the owner. And ask him permission. You ask him permission to set aside 1 lakh rupees. To set aside 1 lakh rupees from the current profits. 1 lakh rupees from the current profits to meet the expected loss. So what does the accountant do? He goes to the owner and says, sir, owner, last 20 years, every year 5% of debtors has not been collected on an average. Some years 8% was not collected, some years 2% was not collected, average 5%. Some years 7% was not collected, some years 3% was not collected, average again 5%. So tell the owner, sir, in the last 20 years I have observed that 5% of debtors were not collected. Now on 31st December 2014 our books of accounts are showing 20 lakhs as debtors. I feel whatever happened in the last 20 years is going to repeat even in the next year. Out of 20 lakhs we may not collect 5%. I may not collect 1 lakh rupees. It's a loss which we are going to get. So he goes to the owner and says, sir, out of current year profits, I want to set aside 1 lakh rupees. You please give me permission. The owner will ask, why do you want to keep the profits aside? He says, sir, in the future I am expecting a loss. That is why I want to set aside the current profits. I will meet the loss out of these profits, he says. So he is telling the owner, this year you are going to get 1 lakh rupees lesser profit because I am going to set aside 1 lakh rupees of profit to meet the expected loss. The owner says, what is his name? Mr. Very Careful. He says, okay, we are about to get a loss of 1 lakh. So no problem. Let us keep aside 1 lakh rupees to meet that loss whenever it comes. Is it clear? So he is a very careful person, hence he has given permission to the accountant to set aside the profits. Now let us see what happens actually. Just close down your books for some time and listen to me very carefully. This is a very important class. Balance sheet of 2014. Profit and loss account 2014. P&L account 2014, balance sheet 2014. In the balance sheet of 2014, we can see how much as debtors? 20 lakhs. Now, let us assume in P&L account we have current year profits. Let us assume we have sufficient profits, only an assumption. We have a lot of profits during the current year. Now the accountant is saying, out of 20 lakhs, in the future we may not collect 5%, 1 lakh rupees. So out of the current profits, I want to set aside a lakh of rupees, which I can use for meeting the loss whenever it actually arises. Okay. So now, what is the entry we are going to pass? We want to set aside profits. We want to remove some profits from the P&L account and keep it somewhere else. We have to pass an entry, P&L account debtor to provision for bad debts. What is it we have to pass? P&L account debtor to provision for bad debts is the entry we pass. Out of the current profits, we are going to set aside how much? 1 lakh rupees. Now, if P&L account is debited, now a new account called as provision for bad debts account will be opened. And in that account we will give a credit by profit and loss account. How much? 1 lakh rupees is what we are going to credit to the provision for bad debts account. So out of the profits, some profits have been transferred to another account called as provision for bad debts account. It is showing a credit balance. It can be shown either on the balance sheet liability side or you can show it as less from debtors. So I will show it on the balance sheet liability side. Provision for bad debts 1 lakh rupees. So what did the accountant do? He passed an entry to create a provision. P&L account debtor to provision for bad debts. By writing this entry, profits in the P&L account will automatically reduce and profits are transferred to an account called as the provision for bad debts account. Provision for bad debts can be shown either as a subtraction from debtors or can be shown on the balance sheet liability side. Provision for bad debts. Is it clear everyone? Are you able to understand this? Okay. So now let us see what happens in 2015. So we now come to the next year, 2015. In 2015, I will open some accounts. Debtors account, provision for bad debts account, bad debts account, profit and loss account. Now, let us take the opening balances. We are in 2015 now. 2014 debtors balance was how much? 20 lakhs. Right here, brought down 20 lakhs. Provision for bad debts account was showing a balance of 1 lakh. Provision for bad debts account will now show a balance of, by balance brought down 1 lakh rupees. Okay. With this we don't have any purpose for this balance sheet. You have to now worry about the 2015 balance sheet. So closing figures of 2014 have become opening figures for 2015. Now in 2015 out of 20 lakhs, we are able to collect 19 lakh 50,000 rupees. Out of those debtors, 20 lakh, we were able to collect how much? 19 lakh 50,000 only. That's it. We were not able to collect 50,000 rupees. What is the entry you pass when you collect 19 lakh 50,000? Cash or bank account debtor to debtors account. Cash or bank account or debtors account when you collect the amount. When you are not able to collect the amount, what is the entry you pass? Bad debts account debtor to debtors account. Two entries you have to pass. Cash or bank account are to debtors. Bad debts account are to debtors. So cash or bank account are to debtors. By cash or bank. We have collected how much? 19 lakh 50,000. How much we are not able to collect? 50,000. What is the entry you have to pass for that? Bad debts account debtor to debtors account. Bad debts account debtor to debtors account. Bad debts account will be debited to debtors. 50,000. And here you write by bad debts. By bad debts 50,000. Debtor account is credited with 50,000. Bad debts account is debited with 50,000. Bad debts account are debtors. Bad debts account is debited. Debtors account is credited. Okay. So last year debtors were collected. We expected 1 lakh loss, but we got a loss of only 50,000. I said it's an average. It doesn't mean that you have to exactly lose 5%. It may happen or it may not happen. Okay. Next year, in 2015, company made credit sales of 30 lakh rupees. In 2015, what the company has done? They have made credit sales of how much? 30 lakh. What is the entry you pass? Debtor account, debtor to sales account. Debtor account, debtor to sales account, 30 lakh rupees is the sales you have done during the year 2015. Okay. So now, debtors account will show how much balance carried down? 30 lakh. Brought down 30 lakh. Debtors is now showing a debit balance of 30 lakhs. This is the closing debtors figure. Let us assume nothing was collected during the year. We have made credit sales, but all the amount will be collected in the next year. Last year debtors we have collected, current year debtors will collect in the next year. It's only an assumption. Okay. Now, what will you do with this bad debts now? Tell me. Bad debts account is showing a debit balance of 50,000. No, it's a loss. Should you debit it to the profit and loss account, or should you transfer it to somewhere else?
Provision for bad debts.
What will you do with this bad debts loss? Should you debit it to P&L account? Last year, to meet this loss, we have already set aside some profits. So to meet this loss, we already have some profits. Normally, where do you show bad debts account in your final account? Bad debts account is normally debited to the profit and loss account. We pass an entry, P&L account debtor to bad debts. The bad debts account is closed by transferring it to P&L account. We pass an entry, P&L account are to bad debts. With that entry, P&L account will be debited, bad debts account will be credited, bad debts account will be closed. But now, can I debit it to the current year P&L account? These bad debts are actually coming from last year debtors. So current logic would be to show this loss in the last year's P&L account. But do I have the last year's P&L account open till now?
No, sir.
Last year's P&L account is closed last year. So this loss belongs to last year. So I should debit it to last year's P&L account. Can I debit it to current year P&L account? The answer is no. We have to debit it to last year P&L account. Last year P&L account is still alive in the form of an account called as what account? Provision for bad debts account. To meet this loss, last year out of profits you have transferred some amount to provision account. So bad debts has to be debited to P&L account, but the P&L account of last year, and the P&L account of last year is still alive in the form of what? Provision for bad debts account. So this account should be now closed not by transferring to P&L account. This account should be closed by transferring it to provision for bad debts account. This account has to be closed by transferring it to provision account. Normally what is the entry you write to close bad debts? P&L account debtor to bad debts is the entry you pass. Now you are not going to pass the entry. You will change the entry. You will pass the entry provision for bad debts account debtor to bad debts. What is the entry you will pass?
Provision for bad debts account debtor to bad debts.
Provision for bad debts account debtor to bad debts account. So here you write by provision for bad debts 50,000. Provision for bad debts account you will write to bad debts 50,000. Bad debts account is closed and it is debited to which account? Provision for bad debts account. Is it clear? That is how we handle it. Now if you see the balance sheet, how much is debtors appearing again? 30 lakhs. So accountant says, yo, debtors again 30 lakhs. Takes is calculated. 30 lakhs into 5%. 1,50,000 expected loss. So he goes to the owner again. Owner, this year debtors are 30 lakhs in the balance sheet. I expect a loss of 1,50,000. Give me permission. Give me permission to take out 1,50,000 from the profits of the current year. This is P&L account of 2015. He says, give me permission to take out how much? 1,50,000. The owner says, wait, don't be in a hurry. I am very careful. My name is what? Mr. is very careful. So you wait, don't be in a hurry. He'll ask few questions to the accountant now. Last year, how much did you set aside? You have set aside 1 lakh. How much did you use? How much did you use last year? For you have set aside 1 lakh. Out of that, you have used only 50,000. So how much is already there with you? How much do you need totally? How much do you need totally? He's saying totally I want 1,50,000. You already have 50,000. So how much should you be allowed to take now? 1 lakh. So the accountant will be allowed by the owner to take only 1 lakh rupees, not entire 1,50,000. So owner says, okay, you want to provide for 1,50,000, you provide, but you already have 50,000. Last year you have taken 1 lakh, you have used 50,000. There is already a credit balance of 50,000 in this account. You need totally how much? Only 1,50,000. You already have 50,000. So how much will you be allowed to take? 1 lakh. So now we have to transfer from the profit and loss account another 1 lakh. What is the entry will pass when you provide for bad debts? P&L account debtor to provision for. Now what is the entry will pass? So I'll write again to provision for bad debts. How much? 1 lakh rupees. If P&L account is debited, provision for bad debts account is credited by P&L account 1 lakh rupees. 1 lakh plus 1 lakh, it is 2 lakh. 2 lakh minus 50,000. You have a closing balance of 1,50,000. Carried down 1,50,000. Brought down 1,50,000. So now provision for bad debts. Where will you show this balance? Balance sheet, liabilities account. Did you understand the logic? Now the story continues in 2016. Listen to me properly. This is very, very important. Now we go to the year 2016 now. Let us take the opening balances. Debtors are showing the opening balance of how much now? 30 lakhs. Provision for bad debts account is now showing a balance of how much? 1,50,000. 1,50,000. This is the balance you show. So once we take the opening balances, we don't have any work with the balance sheet. Now, during the year 2016, out of 30 lakhs, company is able to collect 29 lakhs. How much is the company able to collect? 29 lakhs. So what is the entry you write when you collect 29 lakhs from debtors? Cash or bank account debtor to cash or bank account debtor to debtors. What is the entry you pass? You write here by cash or bank 29 lakhs. How much we are not able to collect? 1 lakh. What is entry you pass when you are not able to collect 1 lakh rupees? Loudly again. How do you give posting? Bad debts account is debited to debtors 1 lakh rupees. Debtors account by bad debts 1 lakh. Close it. With this, the story of old debtors will be over. 29 lakhs collected, 1 lakh was not collected, loss is shown in bad debts account. Now, at the end of the year, let us suppose at the end of 2016, we again make a credit sales of 40 lakhs rupees. At the end of the year, not during the year. At the end of the year, we make credit sales of how much? 40 lakhs. What is the entry you pass when you make credit sales of 40 lakh rupees? Debtors account, debtor to sales account. Credit sales, what is the entry you pass? Debtors account, debtor to sales account. So again, debtor account will be debited to sales. How much? 40 lakhs. Now if you close the accounts, debtors account will show a balance of how much? 40 lakhs. Carried down, brought down, 40 lakhs. Where will we show this balance? We will show it in balance sheet. Debtors, 40 lakhs. Okay. Now, what will you do with the bad debt account balance? Bad debt account will show you debit balance of how much? 1 lakh rupees. Where will you show it? Will you debit it in the profit and loss account or will you debit it in the provision or balance account? See, for this loss, we have set aside some profits. For this account, there is a special graveyard. We need not go to the general graveyard. You could understand. There is a special graveyard for this loss, made last year specially out of profits of previous years. So this loss will not be debited to profit and loss account of 2016. It should be debited to provision for bad debts account. What is the entry you write to close bad debts account? Normally, what is the entry you pass? P&L account to bad debts. But now we are not going to transfer to general graveyard, special graveyard. What is the entry you pass? Provision for bad debts account to bad debts account. Provision account should be debited. Bad debt account should be credited. Right here, by provision for bad debt account 1 lakh. When you pass this entry, now this account will become empty. You are emptying the account and you are dumping that account in which account? Provision for bad debts account. Bad debts. How much? 1 lakh. How much balance is left? 50,000. That you keep in your mind. Now the accountant again sees balance sheet, debtors, 40 lakhs. Does calculation on the calculator. 40 lakhs into 5%, 2 lakhs. Goes running to the owner. Owner, 40 lakhs debtors. Next year expect a loss of 2 lakhs. Please give me a permission to take out 2 lakhs from the profits of 2016. The owner says, wait, sit down, have some water. He'll say, last year how much you already had? 1,50,000. How much did you use? 1 lakh. How much is already there with you? 3,000. How much do you need totally? 1 lakh. Last year I gave you a balance of 150. This year you have used 1 lakh. You already have 50,000. How much do you need totally? 2 lakhs. How much you already have? 50,000. So how much will you be allowed to take from the P&L account? Only 1,50,000. So when profits are transferred, what is entry we pass? P&L account data to provision for bad debts. What is it we are going to pass? To provision for bad debts, 1,50,000 rupees. Provision for bad debts account by P&L account, 1,50,000 rupees. Okay. Do you understand the logic?
Yes,
now let us balance the provision account. It will show a credit balance of 3 lakh minus 1 lakh. 2 lakh rupees. Brought down 2 lakh rupees. We'll show it here. Provision for bad debts 2 lakh rupees. 5% exactly. Expected loss is 5%. No, we have sufficient provision. Are you able to understand? Story continues in 2017. Now the story continues in 2017. Closing figures of 2016 will now become opening figures for 2017. Now tell me, what are the opening figures for debtors? Brought down. 40 lakh is the opening debtors balance. Provision for bad debts.
2 lakhs.
Balance brought down. 2 lakh rupees is the opening balance. Is it clear? Once I have taken the opening balance, I don't have any work with the last year's balance sheet. That is why the balance sheet is now empty. Last year debtors balance and last year's closing balance of provision balance is ready with us. Now, this year we have to collect how much from debtors? 40 lakh. So now the owner was very afraid that I have to collect so much amount from customers. So he sent some strong people to the customers to collect the money. He has taken the help of some bouncers and bodybuilding people to collect the money from customers. So So now those bodybuilders go to each customer's home, they catch hold of the neck of the customer and squeeze in all the money. Okay, we are able to collect 39 lakh 50,000 rupees. We are able to collect. How much we are able to collect? 39 lakh 50,000. What is entry right when you collect 39 lakh 50,000? Cash or bank account or debtors account. By cash. 39 lakh 50,000. Now out of our customer, one customer was a very big bodybuilder. So he did not pay. Bigger than our bodybuilders. So we have some bad debts. Or there was one customer who was very weak. He said, you do whatever you want to do with me, but I will not be able to pay. I have gone for insolvency petition. I am an insolvent person. The court will protect me. So we expect that we are not going to collect that 50,000 from him. What is entry right for bad debts? By bad debts. How much? 50,000. Bad debts account, all right. Debit side. Two debtors. 50,000. Okay. So last year debtors, somehow we have collected everything. 3950 we have collected. 50,000 we were not able to collect. Balance account is debited with the loss. But because of selling bodybuilders, customers are afraid of your goods now. So they say, let us not go and buy goods from Mr. Very Careful, because later on he'll send bodybuilders to collect the money. So they are afraid to buy your goods. During at the end of the year 2017, you were able to make a credit sales of only 10 lakhs. How much? Only 10 lakh. What is entry you pass? Debtor account, debtor to sales account, only 10 lakh. So there are always pros and cons. If you are too strict in collecting, your sales will suffer. If you are not strict in collecting, you will get sales, but you will also get bad debts losses. So it is like touch and go. Okay. So you have a sales of how much? 10 lakh rupees. Debtors account is now showing a balance of 10 lakh rupees. Carried down, brought down. 10 lakh rupees. Balance sheet, debtors, 10 lakh rupees. Okay. Now, what will you do with the bad debts balance now? There is a bad debt balance 50,000. Should you transfer it to general P&L account, the general graveyard, or to the special graveyard? As entry, you write to transfer this loss to the provision account. What is entry you are going to pass? By provision for bad debts, 50,000. Here, you will write two bad debts. 50,000 is the entry you pass. Is it clear? Bad account is credited, provision account is debited. Closed. Now the accountant again sees debtors. How much balance? 10 lakhs. X is calculated. 10 lakh into 5%, 50,000. So he runs to the owner again. Owner, next year we are going to get a loss of 50,000. Please give me permission to take out 50,000 from the profit and loss account of 2017. Owner says, don't be in a hurry. Sit down for some time. Let's talk about it. He will ask some questions to the accountant. How much opening balance you had? 2 lakhs. How much did you use? How much did you use? 50,000. How much you already have? You had an opening balance of 2 lakh. To meet such losses, during the year you have suffered a loss of only 50,000. There is already some balance of how much? 1 lakh? How much do you want now? Totally how much do you want now? You will ask accountant, how much do you expect loss totally? He says only 50,000, sir. How much balance you already have? 1,50,000. So he says, I am not going to give you anything from the profits. Give me back now. You have excess provision. Give me back profits now. How much will you ask back now?
1 lakh.
He will ask back 1 lakh. Because provision required 50, already existing provision 1,50,000. He will say, give back 50,000 rupees to me now. So not 50,000 rupees, 1 lakh rupees to me now. So he has to give. So now please tell me, when you transfer profits to provision, what is entry you wrote? P&L account to provision for bad debts. Now you are transferring to provision, or you are bringing back from provision to P&L account now. Now when you transfer profits to provision, what is entry you wrote? P&L account to provision for bad debts. Now are you going to transfer from profits? No. You are going to do reverse. From amount of profit will now be transferred from provision account to P&L account. What is the entry you will pass now? Provision for bad debts account data to P&L account. So provision bad debts account will be debited to P&L account. How much? 1 lakh. P&L account will be credited by provision for bad debts. Provision account is debited, P&L account is credited. There was no shortfall, there was an excess. Hence excess amount of provision has been transferred to the profit and loss account. Is it clear? So now how much balance is left now? Brought down, the balance will be 2 minus 150, it will be 50,000. Provision for bad debts. Credit balance of 50,000 rupees, liability 50,000 rupees. Is it clear everyone? Observe again. Exactly a provision of 5%. See, this is an alternative way of showing this provision for bad debts. You can show it here on the asset side also. Provision for bad debts within brackets 50,000. Outer column 9 lakh, 50,000 will be shown in the outer column. You can show this way also. But next year, when you pass an opening entry, debtor account will be debited with 10 lakh. Provision for bad debt account will be credited with 50,000. These are two independent accounts. Now, what is the meaning of this? Debtor's book value is 10 lakh, but expected to be realized is only 9 lakh 50,000. It helps the shareholders to understand out of debtors how much is expected to be collected by the management. 10 lakh is what is due from customers. We expect to collect only 9 lakh 50,000. This information is meaningful for shareholders or for the investors or for the owners. That is why we show it as a subtraction from debtors. But actually they are two separate accounts. Next year when you pass an opening entry, debtors account will open with the debit balance and provision for bad debt account will open with the credit balance. Okay. So when you have a special graveyard, bad debt account should not be debited to P&L account. Bad debt should be debited to the provision for bad debt account. Is it clear everyone? Are you able to understand? Now if there is no special graveyard, then there is only one graveyard for all nominal accounts. What are they? Trading account and P&L account. Okay. In such cases, bad debts will be transferred to profit and loss account. So in tomorrow's class, what are we going to do? All stories we will solve again in the classroom. Okay.